Nobody's watching this ETF, but it's dominating in 2025, quietly. No hype, no headlines, just consistent returns quarter after quarter. While retail traders chase meme stocks and AI plays, smart investors are doubling down on this one silent winner. Let me break down why SCHD, the Schwab US Dividend Equity ETF, might be the most slept-on asset in your portfolio. Now, first off, what even is an ETF? An ETF, or exchange-traded fund, is basically a basket of stocks that you can buy and sell like a single stock. It gives you instant diversification. Instead of betting on one company, you're investing in dozens, sometimes hundreds. SCHD focuses on high-quality, dividend-paying US companies. These aren't speculative bets. They're time-tested businesses with strong balance sheets. We're talking about names like PepsiCo, Home Depot, Lockheed Martin, Coca-Cola, and Texas Instruments. Companies that may not trend on Twitter, but they've been printing money for decades. And that's what makes SCHD different. Let's talk numbers. As of mid-2025, SCHD is up around 11.4% year-to-date, outperforming the S&P 500 and the Dow. But that's not the only reason people are buying it. It's also paying out a dividend yield around 3.6%, and it does that every quarter. That means every 3 months, you're getting a check just for holding it. And if you reinvest those dividends, that's when things get powerful. Let's say 5 years ago, you put $10,000 into SCHD and just reinvested the dividends. Today, you'd be sitting on more than $16,000, and that's without adding another dime. That's the power of compound growth. No options, no trading, and no stress. Just smart allocation and time. And let's not forget fees, because most funds bleed you dry. SCHD expense ratio, just 0.06%. That's virtually nothing. It means more of your return stays in your pocket, not in someone else's. Now here's where it gets deeper. SCHD was built to hold up through economic storms. When COVID crashed the market in 2020, it fell, like everything else. But it recovered quickly and kept paying dividends the whole time. During the inflation waves of 2022 and the Fed chaos of 2023, SCHD didn't just survive, it kept outperforming other dividend funds. Why? Because the companies inside it have pricing power, strong cash flow, and actual staying power. And guess who else is holding it? Institutions, big funds, smart money. According to the latest filings, over 1,100 institutional investors hold SCHD, including Vanguard, Charles Schwab, and BlackRock. This isn't a hidden gem, it's just one nobody's talking about on YouTube. And that's what we do on The Lesson. We don't chase what's trending, we break down what's building. Because money isn't made from hype, it's made from consistency. But let's be real, no asset is perfect. SCHD is not a moonshot. You're not going to 10 times your money overnight. And it also leans into value stocks, so in bull runs where tech is flying, SCHD might lag behind. And like any equity ETF, it's still exposed to market volatility. But if you're building a foundation, if you're playing the long game, this thing is as solid as they come. So while everyone's busy trying to catch the next spike or short the next crash, SCHD is quietly doing what it always does, paying you to wait. And here's the part nobody talks about. You don't need to be rich to start. You could buy one share of SCHD right now for around $76, and you'd be collecting dividends next quarter. Stack that every month, and in 5 years, you're holding something that's actually working for you. This is how you shift from guessing to growing, from gambling to building, from surviving to scaling. And this is The Lesson, where we don't just talk about money, we break down the mindset, the moves, and the math behind real freedom. If you're done chasing noise and ready to build something real, hit subscribe and lock in.